Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this Tuesday, June 24th, 2014, and we are seeing a little bit of weakness, at least in the S&P 500 and the Dow. Dow right now down 74 points, S&P down 5.5 points. NASDAQ's bucking the trend just a little bit, up 4.5 points on the day. But again, look at the rollover we've seen today. Very interesting for a couple different reasons. Number one, early in the day, it was just like every day. The markets were floating up. In fact, this was a very, very nice float up. Notice where we went to. The high of the day matches perfectly with the high gap fill level from late last week. And again, this is Thursday of last week before the dividend was paid on Friday. And sure enough, this gap fill was filled on the charts precisely to the penny right here. And you can see it very, very clearly. Now, from that point, you kind of just went sideways. It looked like a little bullish consolidation was beginning. Then the market started to fade a little bit more, and then the bigger sell-off came. And really, look at this drop. 1, 2, 3 bar into the 200. I bought the spiders right there. Made 12 cents first half, 20 cents second half on a scalp trade. About $375 in my pocket there. And then I got out, and sure enough, that was the right call as it rolled over and came down and just made a new low right down here. Now, the interesting things, number one, first of all, the gap fill worked perfectly right here. The 200 moving average for a bounce worked perfectly. But now, what you've seen here is the market actually break to the downside below this trend line. This trend line, if I zoom out, take a look at this, guys. This trend line matches perfectly with this gap fill right across. And the market's been held up above that line for many, many days now. And today it broke below it. Now we want to see where this market closes, because there's always a chance that they could rescue this market. There's always a chance that they could rescue it. But right now, again, folks, markets are trading down on the day. About 50 cents on the spiders. That's actually about $1.10 off the highs of the day on the SPY, which would be about 10 points on the S&P 500. All right, so that's what we have going on. Stocks that are rolling over today. We are seeing some rollovers on a lot of Dow components. For instance, Chevron today, nice rollover on that stock. That stock, if you go to the daily, has just been a catapult to the upside. Yesterday was close to a topping tail. It didn't actually end with a topping tail, but nonetheless, today a beautiful reversal down day today to the again to the tune of about $1 right now, just off the lows of the day. Honestly, Chevron in the next week or two, if the markets get a little on the weaker side, should fall all the way down here. All right, see this pivot high right here in this trend line. If I zoom out, look at this. All right, so this area right here is where your target would be. All right, so let me erase some of these other lines so you guys can see it crystal clear here. All right, just bear with me while I erase these. All right. And we can erase this one too right there. All right, so this trend line right up here is actually your pullback target. And I would say a lot depends on how the markets react over the next few days. But if we actually were to get a little bit of weakness over the next week, you should see it within a week. I mean, literally, I would say 128 is your target within a week if the markets stop going up and start coming down a little bit. And that's just because it's such an overdone, and this would be a scene of the crime retrace right in here. You can see all these little pivots. That would actually be a buying opportunity for Chevron. A lot of these other oil services stocks are having nice sell days. If you look at ConocoPhillips down on the day, look at this move up on ConocoPhillips. Just ridiculous how much that thing's gone. Exxon down $1.15 today. Beautiful little sell-off on Exxon. So again, that is a sector that is dragging things down just a little bit. This morning we did see some news out of the housing market, which was taken initially as a positive, and I think that's part of the reason why the market still caught a bid. If we go back to the spiders here, guys, I want to show you. And by the way, a little bit of weak showings here on the daily chart on the SPY, which mirrors the S&P 500. But if we go to here to the spiders chart, see how the rally began right around 10 o'clock? That was right when we got some home sales data. It surged the markets up, but it just shows you how powerful the charts are. The charts literally went right to that gap fill and then rolled over. Now you're getting a little bit of a potential bottom in as the volume is starting to subside. By the way, the volume was so dead, and then as soon as that heavier selling came in, the volume picked up a little. Still very light on the day, but definitely heavier than yesterday. We're on pace for much heavier than yesterday at this point. I think yesterday we did about 55 to 60 million. We're already with over an hour left to go, basically at that same volume. So you'll do at least another 10, 15 million today, maybe more in terms of volume. All right, so that's what we have going on there, folks, on the SPY. Oil today continues to be on the weaker side, just down slightly, but I think this is interesting too because a lot of people were buying the oil stocks on anticipation oil would continue to go up this week, and you're not seeing that. In fact, if you look at Friday's action, this was Friday that oil topped out, and since then it's actually floated lower. So I think that could be also why you're seeing some profit taking in the oil plays out there. Some other stocks out there that I am highly intrigued by. Number one, Intel's up about 41 cents on the day. One stock that I took profits off the table on with Research Center members yesterday was Micron, and we took it off right down here before earnings. Now, earnings were reported after the bell, and we took only about 2.5% profit, which, listen, is nothing to sneeze at. That's a nice gain. But I just didn't want to hold into earnings because anytime you hold a stock into earnings, it's really more of a 50-50. It could go up a lot, it could go down a lot. And that's where it becomes gambling. And trading and investing shouldn't be gambling. You should be sure the odds are in your favor substantially. And gambling, as we know, the odds aren't in your favor. So anyways, I took my money off the table and look at the move today. Thank goodness we did that. Otherwise, we'd be out of the money a little bit on this Micron. And again, we took about a 2.5% gain on this, moved out, and it rallied up. And this was a shorting play, obviously. We were short Micron there. So very nicely done there. Let's see what else we have. Volatility is inching up a little today on this rollover. We have some other plays out there. It looks like Disney's up a little bit, J&J, Walmart, Intel, as I mentioned. But aside from that, everything else is pretty red on the screen. Technology, again, is having a decent day. If we flip over to Apple here, you can see Apple has rolled over, but it's still green on the day, so it's still holding up there. Amazon, on the other hand, is a weaker stock. Netflix, take a look at Netflix, up about $3. Look at Netflix though, was up at 150, at 450, and rolled over, and basically came into the flat line. Now you see the 200 moving average there is holding things steady and trying to keep it up just a little bit. So interesting little interest factor there on Netflix. Excuse me. Tesla today. Tesla was green on the day and has rolled over. I think Tesla's probably coming close to a short-term top on the charts. I don't know if it will get all the way back to this high. I actually don't think it will, but right now I don't have a level that I'm ready to short it at. I think this is your first level. It just missed that today at the high. So we'll watch to see in the coming days if we start to see that get closer to that level in the short term. All right? Going back to the SPY, let's flip back and flip over to the intraday 10-minute chart and just see what's going on. Looks like the spiders, again, are just kind of chopping here in the lower ranges. Again, you are below this level. If we close below that level, basically what that means, all right, let me just go over this real quickly because this is important. So right now, if you close below this line is approximately a 50% retrace from this high to this low. And as long as you close above this line here, at the end of the day, you would have a strong positive bias on the market into July 4th. If you close between this line and this line, which is where we are now, and this is at the end of the day, then you would have more of a small positive bias. Okay? If you're below that level, from this line to this line, you have a neutral to slight negative, and anytime you close below the low from Fed Day last Wednesday, you would actually go very, very bearish. Okay, so just keep that in mind. And this is how you should be able to track the market very accurately, in fact, and kind of gauge it very, very well. Okay, so that's what we have going on there on the spiders. And again, we'll see where this market closes in about an hour and 15 minutes. But I encourage you to come take the 7-day free trial here at InTheMoneyStocks.com. Join the pros, profit with the pros. Let's get this party started. Take care, guys.